And gentlemen, welcome back to the channel. AMC stock on Friday massively outperformed the markets. Now, AMC has earnings coming up in this next week, and that could be a possible reason as to why. If we get some kind of good announcement on earnings, that could be important. Now, we're obviously going to hear about the court proceeding, but I'm not sure if we're going to hear anything about that. That is going to be impactful on the earnings, although it is possible that Adam Aaron could outright cancel that, and some of the strength we've seen recently would kind of suggest that is a possibility. AMC does have alternative ways to raise capital, including the bond market. Although that's not ideal, it's possible. Okay, so we're going to talk about the earnings expectations as well, the EPS numbers, the revenue numbers, all of that. And then I want to talk about what happened in the markets on Friday and what the economic data looks like heading into next week, because that's going to be a big story as well. And let's actually start this video off with that. So hit the like button, subscribe to the channel, and source your comments, questions, or concerns down below in the comment section. But the economic data on Friday, we got the non-farm payroll report, and that non-farm payroll report came in at 180,000 jobs, 187,000 jobs. Now, this is a pretty good number. The historical average is around 170,000 jobs added per month, but it's lower than where it has been recently. Go ahead and pull this up. Right, this is where you're at now. You're kind of flattening out even from last month's jobs number. That got revised down to 185,000. So, yeah, you're sitting at the lower end levels. Now, this chart makes it kind of hard to see on the... okay, let's go ahead and do... From 2006 until today. Still kind of hard to see. Let's try 2007 if that makes it any easier. No, but essentially when you start to get initial jobless claims that get to where we are now, 180-some thousand, 170,000, you tend to go negative pretty quickly. I know it's kind of hard to see, but it was only just like one report that was positive back here in 2007-8 era, and then started to go negative, right? So it does happen pretty quickly. Once you get down to these lower levels, once you get down to this kind of market average. Now, good news is the unemployment rate went down to 3.6%. So that is, or 3.5%. You were expecting 3.6%. So that is better than not. And it's hard to make an argument that you're going into recession when the unemployment rate is 3.5%. That's a very hard bargain to sell. So I'm not convinced that this drop that we seen on Friday is going to be this crazy crash. Yeah, it's going to be a correction. It should be a correction. That, like, we should literally see that, because I mean, look at what's happened to the market so far. You've rallied very aggressively. Now, in terms of AMC, a correction in the broader markets could be positive, and this could help lead to less money for hedge funds and institutions to use to cover or cover their margin requirements in AMC stock, especially since the stock has rallied recently. On a scale of likelihood outcomes, the MOAS, or just a short squeeze in general, has gotten more likely. So that means your margin requirements have obviously went up if you're shorting AMC as well. So I think that's a way that you can look at it, and it could be positive. Now, as far as the economic data coming out next week. You don't really have anything for Monday and Tuesday. For Wednesday, you don't really have much. And then Thursday, you're going to have the CPI report across the board. You're expecting the headline month-over-month reading to be 0.2%. Core inflation rate month-over-month to be 0.2%. Inflation rate year-over-year to come in at 3.3%. And core inflation rate year-over-year to come in at 4.8%. So you're actually experiencing a higher year-over-year number because the base effects, right? Last year, inflation was kind of coming down at this point, so it makes your year-over-year number harder to beat. And it was the highest we've seen in July of 2022. So that's why your 3% number looked so good last month. Then you started to drop following that. So just keep that in mind. Obviously, on a really good trend here. But if this starts to go higher, markets tend to look at that year-over-year number and take that into more consideration than the month-over-month numbers, which I find ass backwards. But hey, there's only so much you can argue with the markets about. The markets are going to do whatever the hell they want to do anyways. Now, that's basically all for economic data. You do have the Michigan Consumer Sentiment Survey for August coming in Friday, and you're expecting 71 for the reading. Last month's reading was 71.6. So you are expecting it to come down a little bit, but really not move at all. The big things out of these surveys are the 5-year inflation expectations as well as the 1-year inflation expectations. 1-year inflation expectations are expected to fall a little bit to 3.3% from 3.4%, and the 5-year inflation expectations are expected to come in at 3%, and that is the same as what you have seen previously. Okay, so that's really what is going to move things around as far as data for next week. A big story of what happened on Friday was actually somewhat of a rush to safety. We've seen bond yields going up quite a bit recently. Investors have been selling bonds due to the Fitch downgrade, due to all of those reasons to why you would obviously sell bonds. They just got downgraded, right? Well, you actually seen investors buying the bonds on Friday, dropping the yield by almost 15 basis points. Now, how this works is when investors sell bonds, well, that drives yield up. When investors buy bonds, it drives yields down, kind of like a dividend stock going up or down, right? If the yield is fixed, if you see a lot of people selling that dividend stock, the stock's getting cheaper, the yield stays the same, the dividend stock's yield goes higher, the cheaper the stock goes, right? If people go out and buy that dividend stock, well, it drives the price of the dividend stock up. If the yield stays the same, or the dividend stays the same, then you're effectively lowering the dividend. And that is what is happening here. So investors did buy the bonds, which is a sign of maybe some fear out there in the markets. Now, let's switch gears, talk about AMC. So AMC is going to have earnings this upcoming week on August 8th. And Wedbush analyst Alicia Reese said theatrical exhibition is on the path to normalization with improving release slate in 2023. Our industry estimates are for 2023 North American box office to end up 20% over 2022, with AMC at least maintaining its 22% market share, if not expanding, with its vast network of premium large format screens, she explained. We expect positive commentary about the successful Barbie and Oppenheimer run so far in AMC's domestic and European markets. AMC enjoyed its best week ever based on admissions revenue from July 21st through July 27th, the company said Monday. Goes on to say, we expect an overall optimistic view on the company's ability to mitigate any negative impacts from the ongoing labor strikes should they end in the next 1 to 2 months, she wrote. Let's go ahead and see the actual EPS numbers. So, analysts surveyed by FactSet expect AMC to report a second quarter loss of 4 cents per share on revenue of $1.287 billion. So, getting closer to that actually positive EPS number. It's possible that AMC could give you a positive EPS number. And if that were the case, the stock would absolutely rip. So that's going to be the biggest catalyst next week for AMC in particular. If we look at the data currently on Ortex, you are on the threshold securities list. No surprise here. Let's go ahead and look up AMC's FTD numbers. And let's see what we got. Well, you're going to start August 7th at about 12.5 million FTDs. And it's basically going to ramp up from there throughout the rest of the week. So, yeah, you're still on the threshold securities list. You got 30.17% short interest of free float, up 0.36% on Friday, 156 million shares that are currently sold short. Cost to borrow max is going up 380%. Cost to borrow average 357%. Cost to borrow minimum 8.6%. If you look at Interactive Brokers short availability, you got like 0 shares available, 100 shares available with a cost to borrow fee of 211%. So you're actually seeing those numbers going up, which recently we have kind of seen those flatten around 150%, and now it's over 200%. So that would be a positive. As far as the option activity, 41 orders totaling $10.6 million on Friday, positive order value of 8%. You did see some calls head into AMC towards the end of the day, somewhat a positive sign. But hey, we'll ultimately see. Anything can happen. The short score is 93, $762.18 million worth of short positions in AMC. Days to cover sitting at 8.18, utilization at 82.1. Now we've talked about this many times, a couple times here now on the channel, but the banks are really buying the dip on AMC and selling out of those short positions that they had. So if you wanted to look at anything for a potential sign on what's going to happen with AMC, I think the banks, especially your Canada banks, are kind of telling you something, right? The Bank of Montreal sold out of their put position entirely, almost entirely, and added to their call position worth 14.5 million shares, increased their share position by 7,000%. Barclays sold out of their put position and increased their call position by thousands of percent as well. Some very strange things happening with the banks. So, and it's bullish for AMC. Now, the Stonko Tracker data for next week, pretty encouraging as well, in my opinion. You got about 8,000 calls in the money, 89,000 calls out the money. In the money puts at 34,000, out the money puts at 201,000. You don't have a lot of calls. So if you do see some kind of good news, if earnings are good and people do flood to buy AMC's options, that could be a very, very positive thing for the stock of AMC and could help it move higher. Now, as far as a technical basis, again, you kind of gapped up back here on Friday. You filled the gap. Now you're bouncing from the gap fill level and you're kind of coiled here. This is a perfect technical setup for a continued move higher. This is very much not a bearish technical formation. It looks pretty dang positive. And even what we've seen with AMC in after hours on Friday, up 1.22%. It's a very strong after hours move, guys. So that's going to do it for this video. Hit that like button, subscribe to the channel, and source your comments, questions, or concerns down below in the comment section. You guys have a great rest of your day, and I will see you in the next one.